Hey, what's going on, guys? I'm Dr. Boyce Watkins. Welcome to the Black Financial Report. I wanted to go in real quick and give you guys a quick update on what's happening in the market today. Today is Friday, June 26th, and the market has closed at 750 points down. So that's a big deal. A lot of concern about the corona situation, and it's just a bad way to end the week. And so I'm looking here, and they basically are arguing that the market declined because Texas rolled back its reopening measures, and a lot of states are slowing down. I think Florida just said we stopped. We never said we'd go further than that. New York, their governor is playing politics with different states. I think that he's requiring everybody that comes from, a hotspot state to quarantine, and he's claiming that they're playing politics, but actually, I think you're playing politics when you accuse other people of playing politics, because I think that initially the Florida governor had required all New Yorkers to do a quarantine. And actually, Alicia and I had gone to Florida, and when we were there, they said, we can't rent you an Airbnb because you're from New York. And I said, I'm not from New York, I'm from Illinois. And what happened was my old address was on my Airbnb account, and it was a New York address, and I didn't know that this was going on. So it's all political, right? So now they're all kind of playing this game with each other. And so here's what's going on. Let's see here. Tom Essay, the founder of the Sevens Report, says the resurgence in cases is raising concerns that the rebound may be short-lived as voluntary or potentially more government-mandated shutdowns become increasingly likely. Texas basically ordered all the bars to shut down. I mentioned that earlier, that shutting down the bars is probably the first thing that a lot of cities are going to do, because the bars, they claim, are the number one reason that the infections are increasing. Let's see. Restaurants, meanwhile, must limit on-premise dining to less than 50% indoor capacity. Florida announced that it will suspend on-premise consumption of alcohol at bars. So everybody's focusing on the bars. And so the number of cases is about 9,000 in Florida, which means, there will be some people that die, but it's not a massive, it's not thousands of people dying. It's, a couple hundred, I think. I think 5% death rate, which is 10% is 900. So about 450 people die, right? So, which is sad. But remember, a lot of those individuals are older people in nursing homes. So it's really more of a concern for the the more vulnerable population. Moving on, shares in companies that would benefit from a recovery tumbled. United Airlines, American, Delta all slid about 3%. Norwegian Cruise Lines dropped. John Hill, a strategist at BMO, said virus fears are making investors rethink positions ahead of the weekend, rethink their positions, which is similar to the trading action seen in March and April. This is unfavorable for bonds and negative for stocks, favorable for bonds and negative for stocks, as investors are moving their money from stocks into bonds. The U.S. 5-year Treasury yield dropped to a record low of 0.29%. The 3-year rate also slid to an all-time low of 0.17%. That means that basically, because the demand for bonds has increased, the prices of bonds have gone up, which means yields start to go down. Banks are also under pressure. The Fed did a stress test where they tested the banks to see what would happen under various scenarios with the coronavirus, and they have concluded that many banks are quite vulnerable to what can happen if you have a prolonged economic downturn, if the economy doesn't get better. And so basically, they expect that banks will survive, but a lot of bank stocks got hit. Bank of America, JP Morgan Chase, Wells Fargo all dropped between 5 and 9%. Nike shares dropped because they actually exceeded the loss that they were expected to have. And so pretty soon, the Commerce Department is going to be announced that the new unemployment numbers, and the unemployment numbers are going to be big in terms of shaping what happens in this recovery. If you want to know the Dr. Boyce breakdown, here's my breakdown. This too shall pass. I believe that these all represent buying opportunities, but these are not buying opportunities for short-sighted investors. I think there's a lot of profit taking that is naturally going to occur because the market has done so well the previous month. I think you could see some prolonged downturn, in the sense that as these numbers of new infections start to rise because there's more testing, and when you open up, you're just going to have more infections. The question is, how many infections are acceptable for you to have an open society? You'll never have zero infections, right? So the question is, what number is acceptable? We're still going to grapple with that as a society. And the big winning day will be the day that the vaccine comes out. That's the day where everybody's going to feel good. Ding dong, the witch is dead. The whole world's going to change at that point, in my opinion. Now, in terms of what's happening here with the market, short term, I think headlines are going to be a big deal. I think that earnings are going to be a big deal. So a lot of companies are going to issue their earnings announcements, and the analysts have expectations. And if those earnings are worse than the expectations, then you're going to see some big problems. Some macro data is going to come out. There's going to be, not just reports on unemployment, but GDP growth, things like that. How that looks is going to play a part in all of this. But then also Fed action is going to play a part in this as well. The Fed is kind of the police officer that's coming in to save the day. And the question is, how much firepower do they have to save the day every time bad news comes out? But I, again, also argue that media plays a big part in this. So if media attention is suddenly all off in another direction, I don't really even know if this is going to be the top topic of conversation. And I still hold to the point that even though the virus is very real, people are playing so much politics with this. For example, I saw the Republicans were criticized by the Democrats for hosting Trump rallies, right? Saying you're putting people in danger. How can you tell people to congregate? It's so bad to do that, right? Okay, fine, whatever. But then the Democrats just 2 weeks ago, they were encouraging people to go out and protest, for Black Lives Matter and for what was going on, 2, 3, 4 weeks ago. So to me, it seems to me that gathering and congregating is only a good idea if it benefits you, and it's a bad idea if it doesn't benefit you. And at the end of the day, I look at the data and look at the numbers. And so far, I think the biggest problem with the virus growth and infection growth is when they started talking about the number of hospitalizations going up. That means that you're starting to really put pressure on the healthcare system. That, to me, so far is the only major vulnerability that I see. Infections aren't that big of a deal for a lot of people because millions of people have probably gotten this virus and don't even know that they have it. Right? But then number two, a lot of the deaths. A lot of these individuals, I think that when you count deaths, you have to take out those people who were gonna die soon anyway. If you're talking about a 91-year-old who's in a nursing home, it's not like they have 50 years in front of them, right? So that's really what you're really dealing with, and I prefer to deal with reality than to deal with spin. From an investing standpoint, I'm a long-term investor, so I believe that most of these stocks right now present massive massive buying opportunities. So if you want to know what I'm doing, I'm buying everything. And so I told you guys I like Amazon. Some of you were asking earlier, that you said Amazon costs too much, I can't buy Amazon because it's $2,600. Actually, you could buy fractional shares allows you to buy $5 worth of Amazon if that's what you want. And also I did a little calculation. I put it on my Facebook page where I explained that that based on the annual rate of return on the stock market for the last 30 years, I think since 1990, the market's returned an average. If you take every year's return of the S&P 500 and you take an average of that, you get about 11.45%. And I said, do you know that if a person had invested, the average car note for a new car in 2020 is $554. I said, if a person had invested $554 every month since 1990, they would have about $1.7 million. Now, of course, 554 is a big number in 1990, but that was about the amount of my rent. I've been paying rent since, I started, I got a mortgage eventually, but I was paying rent back in 1990. And also, if you add up the amount of money I was spending on things I didn't need, going out, buying new shoes, buying new clothes, going on trips, eating out at restaurants, I probably did spend over $500 a month back then, right? So here's the thing too, even if it's not 554, you could drop that, cut that number in half. Okay, so instead of 1.7 million, you now have 900,000, right? Cut that number in a third. Instead of having 1.7 million, you've got 400,000. My point in making that calculation is to get past all the negatives, right? The first thing people want to do is say, I can't do it. Like, that's slave talk. That's weak talk. That's powerlessness talk. Right? So when I say, look, if you'd invested $554 a month since 1990, a lot of you aren't even old enough to do that. So I could do that same calculation for the last decade, for the last 5 years, in fact, the last 5 to 10 years, the market's done much better than 11.45%. There are many months where it was up 30%. But what's fascinating to me is I look at the comments and I see some people who say, wow, that's really interesting. I didn't know that. And that's an opportunity. But then I see a lot of people who say, what about the people who can't afford that? And, and the thing is that you could take that 554 and you could chop it by 10, a factor of 10, $50 a month, right? Well, then that means instead of 1.7 million, you've got $170,000 in liquid cash. My point is, the reason I lay that out is because you don't have to be poor. In this country and with this stock market for the last 120 years, you don't have to stay poor if you don't want to. Like if you're really determined to not be poor anymore, there's a way out. I remember when Disney puts out Black Panther 2, they are going to make $1 billion off the black community. How can black people give $1 billion to Disney every time they put out entertainment and still claim to be poor? How come Beyonce and Jay-Z can do concert tours in every city across America? And even if you filter out the white people that spend money, there are, hundreds of millions of dollars spent by black people. How can we be poor? How can we be poor if people are putting businesses in our neighborhoods all across the world and making, gallons and buckets of money? How can we be poor? How can we be poor if Popeye's Chicken is making tens of millions, hundreds of millions of dollars a year, whatever they're making, by putting stores strategically in black communities? How can we be poor if you can invest with the amount of money that it costs to buy Popeye's Chicken? So what I say to whenever somebody tells me they can't afford to invest, I say, okay, but you can actually invest with the amount of money that you spend on fast food. Everybody knows most black people can afford fast food. But not only can you not just afford fast food, but a lot of y'all go eat at Applebee's. Maybe you eat at nicer restaurants than that. A lot of us take trips. A lot of us have nice cars. If we have anything, we have super nice cars. $300, $400, $500 a month in the car note, right? A lot of us pay a ton of money in rent. You're making your landlord into a millionaire. So what I really kind of want, and this is just me kind of going on a little mini rant, because this is something that was on my brain today, is I kind of get tired of the slave talk. I get tired of the powerless talk. I know you've defined yourself as being poor. Okay, whatever. I know you defined yourself as being powerless. Powerlessness can become an excuse. It can become a crutch. How are you powerless when it comes time to build something for your future, but you're not powerless when it comes time to getting a new pair of Jordans? Or you're powerless when it comes time to invest for your family, but you're not powerless when it comes time to get a new iPhone. How many of y'all know folks that got nice new iPhones, right? So I'm just telling you, not that you can't buy your iPhones, not that you can't buy your Jordans. I'm just saying that you have to love yourself as much as you love the white man and his businesses, right? You have to love yourself as much as you love consumer products. You have to love your future as much as you love instant gratification. If you do those things, then you will be successful. If you do not do those things, then you will remain in the trap, in the little box that they keep you. Maybe that's why they call it trap music, because your butt's going to be trapped forever. So don't be trapped. Make good decisions. Make a move. If you want to dig in further, we have great stuff going on in the Black Business School. It doesn't cost a whole lot of money. Doesn't cost more than what you spend going to the movies or fast food. So feel free to join us. We have a program. You can do the first 14 days for $1 at theblackstockmarketprogram.com. THE. That's theblackstockmarketprogram.com. We do this stuff on a regular basis. I teach you everything you need to know. You can get started tomorrow. Hit the thumbs up button, hit the share button, hit the subscribe button. I'm out of here. I'll see you guys soon. Have a good day. Peace.